All right, hi everyone. Welcome to today's webinar brought to you by IC Markets, where we'll be covering live analysis session. Apologies for the apologies for the delay. We had a bit of technical issues with the camera, but everything's all sorted right now. Okay, we're back online. Right, just want to make sure you guys can see my screen and hear me loud and clear as well. And if you have any questions, comments, or feedback, or requests for any analysis, please drop them in the live chat box as well. Right. Just want to make hi Jamilu, how are you? Good morning, good afternoon. Can you hear me loud and clear? Right, perfect. Thank you so much. And apologies once more for the minor delay that we had. All right. Okay. So once again, right. Welcome to today's webinar session. We'll be covering the live analysis session, brought to you by IC Markets. All right. Of course, let's go through the disclaimer as usual. Please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. The analysis contained herein does not constitute a personal recommendation and does not consider your personal investment objectives, investment strategies, financial situations, or needs. Also, do take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital and you should only trade with money you can afford to lose. Alright, okay, so my name is Ketan Rameshchandra. I'm an investment analyst here at Everest Fortune Group, and this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group. Alright, so just a simple agenda for today. So we'll start off by looking at what are some of the key economic events coming up this week. Right, there's quite a few things going on, but these three are the main ones to look out for. We have the ADP employment change that will be released on Wednesday, 30th of August, following which on Thursday we have the PCE price index and US unemployment claims, and we have the big one on the 1st of September, Friday, which is non-farm payrolls, right? This is going to be a big market moving event, and we can expect a lot of volatility during this period as well, or rather during this news release. All right, before we dive into the charts, let's just cover some of the other key economic events coming up as well. We'll go through that briefly. So maybe we'll just jump to Forex Factory first. All right, so here I am on Forex Factory. I'm on GMT time. So we're just going to highlight some of the main economic events coming up this week. All right. Okay, so this is a calendar for 28th August to 1st September. Right, as we mentioned earlier, we have non-farm payrolls, the big ones coming up at 12:30 p.m. GMT on Friday, 1st September. We have PCE price index, which is an inflation measure gauge, which is the Federal Reserve's preferred measure of inflation. That comes out together at the same time as unemployment claims, which is at 12:30 p.m. GMT. We also have manufacturing and services PMI data out of China. That's going to be important for crude oil prices as well. And we've also got Australian CPI data, as well as German and Spanish inflation data. And of course, we have ADP non-farm employment change as well. So there's also a few things coming up tomorrow. We have Joel's job openings that could impact the demand for the US dollar. We also have the consumer confidence survey from the conference board, as well as the new designated governor for RBA, Governor Michelle Bullock. Will be delivering her speech at an event tomorrow as well. All right. Let's just okay. Let's just go back quickly to the slides to just see. All right. What can we? How can we interpret the data that's coming up, or rather the news events that are coming up this week? All right. So on Wednesday, 30th August, Australian CPI has been slowing quite steadily, right, with the June's reading falling to 5.4% year over year. So we can expect this trend to continue. So this is likely to put pressure on the Australian dollar on this date. Should inflation data continue to fall and fall at a faster pace. And of course, we have the US ADP employment report coming up. And the last two reports in June and July was relatively strong. and actually the data was much stronger than the respective forecast. So because of that, this can act as a bullish catalyst for the US dollar. Right. So as I mentioned in this point here, another strong print for August could be bullish for the dollar index once more. We also have GDP numbers coming up in the US. So there's not much changes expected from the advanced estimate. We have the Q2 growth coming in at 2.4% year over year, and the updated result is not likely to deviate much from this advanced estimate. Okay, as we mentioned about China's PMI reports, right? So any improvement in the PMI activity, especially related to the manufacturing sector, could rekindle demand for crude oil as well. Okay, and then we also mentioned we have US unemployment claims, right? So last week, unemployment claims printed lower than the estimate. This was the second consecutive week of lower claims. So when you have lower claims, this usually acts as a bullish catalyst for the DXY. That's for the dollar index, as less claims means that the labor market in the US remains robust, right? And we have the July's PCE price index released as well. So this is an inflation gauge, and which is actually the Federal Reserve preferred gauge of inflation. So we saw for the month of June, both headline and core PCE readings declined quite significantly, but we also saw July CPI and PPI data show a recent uptick, right? So it's quite likely that we may see uh, July's PCE price index for both headline and the core reading turning higher as well. So if that happens, it's quite likely we're going to see demand for the US dollar again, because if inflation were to make a possible resurgence, then it's very likely the Federal Reserve is going to keep rates higher for longer, or maybe in fact even raise rates again in September. And finally, we have NFPs coming up. So for the last 2 months, basically June and July, NFPs have been coming in lower than their respective estimates. So they have been adding less jobs every month. Unemployment rate has been ranging between 3.4 3.7%, and the rate for August is likely to remain within this range. Right, so another lower than expected month of job gains could function as a negative catalyst for the dollar index. Right, so this could be a very volatile period during Thursday and Friday. It could be a case of stronger inflation data causing dollar index to rise, and then perhaps you could have a scenario where weaker than expected NFP numbers will cause dollar index to drop. So do watch out towards the end of the week, where we can expect much higher volatility for currency markets as well as gold prices as well. All right. Okay. Before that, okay, I think now because let's just go. We'll come back to this later, to the slides later. I think we can go straight into uh today's charts. Okay, before that, today we'll be covering we'll be going through the analysis using the 4-hour time frame. For those who may have missed Desmond's pre-market live analysis this morning, here's the website. This is the website. I'm going to paste the link in the live chat as well, so you guys can watch this video after this session. So in this pre-market analysis, Desmond goes through most of the major currency pairs as well as uh, the commodities, and you can go through the analysis with him where he presents it on the daily time frame. So it's a more higher time frame with a longer term outlook, right? Okay, so now we're going to go back into trading view, and we're going to cover the 4-hour time frame. All right, okay, so here I am on the chart for the dollar index. Right, okay, so currently I'm on the daily time frame. So these are some of the levels that were identified earlier this morning. Right, we can see dollar index rising very strongly since mid of July. So it was strong weeks of six consecutive weeks of strong gains. Right, you can see price breaking past 104 and going as high as 104. Or is it 45 last week? Right, last Friday. Right, so these are the levels for dollar index on the 4-hour time frame. Daily time frame. So as expected, if dollar index is rising, the euro is falling down as well. It's testing this ascending trend line as we speak, or rather it tested it last week and bounced up higher. And pound also, of course, after breaking through the ascending trend line, it triggered a strong downward move, and it still looks like it could fall lower, and dollar yen as well is pushing higher, right? Okay, so for dollar index today, it dropped to a low of about 104, and now it bounced off this level. So it seems to be fluctuating between the first support and first resistance as we speak. So if dollar demand does remain strong, it's quite likely it could push up towards the first resistance, where it could finally run into, or where price could finally stall and perhaps potentially reverse to drop lower. All right, okay. Let's just zoom into the 4-hour time frame to find more actionable levels. All right, okay. So I think with regards to dollar index, yeah, because of where price currently is trading, I think the first resistance and first support are very applicable on the 4-hour time frame as well. I don't think we need to adjust these levels much, but I'll probably just highlight a zone, right, rather as well for on the resistance side. So anything between 104.50 to 104.72 should be a major resistance zone for the dollar index. In terms of support, I do see a level here. I think we can label this as a sort of like an intermediate support level. Just adjust that. So 103.97, we can see price running into resistance here back on 23rd of August, and then finding support on 25th August last Friday, as well as earlier this morning. Right, so I think this level here at 103.97 can be used as an intermediate support. Take note, it is not the strongest support level, but it is pretty, it should offer some level, yeah, it should act as a potential support area. Right, so first support would be this strong overlap here that we see at 103.57. Intermediate support at 103.94. First resistance would be a zone between 104.52 and 104.72. Right, and in terms of the second resistance on the 4-hour time frame, okay, this is certainly too high, so it's not applicable on, not really applicable for the 4-hour time frame. So I would choose this swing high that took place on 15th of March as my second resistance. Right, so you can see price making a significant swing here back on the 15th of March. So this level at 105 exactly is where I would like to identify the second resistance. And if I just pull it back as far as here, we can see price making a significant swing back in February and early March as well. All right, okay. So second resistance for the 4-hour time frame would be at 105. First resistance would be this swing high together with the zone that's from 104.50 to 104.72. To the downside, intermediate support, pretty decent overlap here at 103.94, and the first support that's been identified on the daily time frame is applicable for the 4-hour as well. Okay, now maybe this second support is a little too far for the 4-hour time frame, so let's see if we can identify something a little bit more actionable and closer. If I were to look at just in terms of overlaps, this level here is probably decent, but I think we can also use the Fibonacci retracement tool, starting with this swing low on 18th of July, ending with the swing high on 25th of August. Let's pull up all the fibs. Do we see anything that lines up close to where we see? Yes, I think, yeah. So between the first support 103.92, right, I think let's zoom in a bit. We see a pretty decent overlap here at 103.19 that lies just slightly below the 23.6% Fibonacci retracement as well. So I think we can use this as a more applicable second support area. Right, I'm going to get rid of all the other Fibonacci levels because they are not, they're just simply too far from where price is currently trading. So perhaps in the future, should our dollar index retreat and break through all these support levels, then potentially we could use the 38 and 50 to help us identify significant overlap supports. All right, okay, so let's just keep 33%. All right, great. Okay, so here we are on the dollar index with more actionable levels or more actionable support and resistance levels as well as zones. All right. Okay, so this is dollar index. We can see it's although it dropped as low as dipped under 104 earlier this morning, but it has bounced up. So it does seem to be ranging, fluctuating between 104 and 104.50 as we speak. Right. There's no real catalyst on the calendar for today. We just had Australian retail sales, but Europe and America is pretty quiet on the calendar front, so I don't think we're going to see any economic news or data event that could act as a potential catalyst in either direction. So quite likely we're going to see dollar index probably just fluctuate between 104 and 104.50 tonight. Okay, so this is dollar index. Let's move on to the euro. Right, so here we are on the 4-hour time frame. Let's try and see if we can find something a little bit more actionable. Okay, of course, with regards to the first support, I think that's fine. Right, we can use the first support that was identified on the daily time frame as something that's very applicable for the 4-hour time frame as well. Okay, let's see what about first resistance. Okay, this is definitely too far. So let's try and identify something a little bit more closer. Okay, I'm going to use a Fibonacci retracement starting from this swing high here on 10th of August, ending with a swing low here on the 25th of August. All right, you can see the trend line is sort of capturing the price structure pretty well. It's not the best, but I think this should still be pretty decent. The trend line does capture the market structure, the price structure pretty well. So let's just pull up all the Fibonacci levels and see if we can identify any major overlaps as well. Okay, so what I see here, this price level here at 1.0840, we can see price finding support of this level 3 times back in June and 23rd June, 30th June, as well as 6th July, and then finding a little bit of support on 22nd of August as well before breaking through. And it did run the resistance on Friday as well. So I think this level here at okay, I'll just reference it from here at 1.0835 is a pretty strong, significant overlap resistance that aligns with the 23.6% Fibonacci retracement level as well. All right, now what about the second resistance level? All right, do we see any other nice overlaps as well? Probably this is what 109, so about 70 pips away. This is about 40 pips away. So you could say in terms of an overlap, okay, so this level here at 1.0918 is a strong overlap level as well. You see price running into resistance back in 3rd of July, then finding support on 3rd of August, and then resistance again on 17th August as well as 22nd August. So I think this is a good overlap level to identify as the second resistance. And now we'll tidy up the Fibonacci levels. We'll just keep 23 and 50%. Right, so we're going to keep 23 and 50%. So we have a combination of a strong overlaps plus the respective Fibonacci retracement levels to help us identify the first resistance and the second resistance for the euro on the 4-hour time frame. All right, okay, first support as we mentioned earlier, the first support that's identified on the daily time frame is very applicable for the 4-hour time frame as well. Okay, what about the second support? Where can we find something? Okay, I do see another nice overlap level here at what is 1.0740. You can see price running into resistance here back in end of May, and then after price broke higher, it found support on 12th of June as well. So this level here at 1.0740 is where we've identified the second resistance. Right? Can we find anything else to help us add more significance to this level? Maybe we can try and can we do a Fibonacci projection? Oh wait, okay, maybe I can use a Fibonacci extension. All right, so I'm going to first of all, do a Fibonacci retracement starting from this swing low here on 6th of July, ending with a swing high here on 18th of July. Going to look for 127, 161% Fibonacci extension levels. Right. Okay, so when price makes a significant Nike tick like this, as you can see, this is a strong Nike tick. So when price reacts in this way and starts falling lower, and if it should break through the 100% Fibonacci retracement level, the next major support should be coming in at about 127.2% Fibonacci extension level, right? So this overlap sits slightly above it, so I think that this is fine for now. I think the overlap itself should be okay. Let's just tidy up this part. I don't think we need the Fibonacci extension level for now, but perhaps in the future, should price break through the first and second support, we can definitely use that extension level in term to help us identify a new support level for the euro. Okay, so we have a strong support zone for the euro here at 1.0783 with the combination of the ascending trend line as well as this overlap support, as well as the third factor of the 78.6% Fibonacci retracement level that was identified by using this Fibonacci retracement from this swing low on the 31st of May and ending with the swing high on 18th of July. Alright, okay, so this is what we have for the euro. Yes, after going as high as 1.0820 this morning, it pulled back, but it looks like the uptrend is going to continue. Right, so we could see as dollar index fall towards this intermediate support level, it's quite likely the euro is going to come and at least push and test this first resistance at 108.35. Okay, what about the pound? Right, okay, so again, these are the levels of identified on the daily time frame. Let's look for something more actionable. Okay, of course, with regards to the first resistance, I think what's applicable on the first daily time frame is also suitable for the 4-hour time frame as well. If anything, I think I can probably highlight this level here at 1.2606 as an intermediate support level, because we can see price run into reverse from this level earlier this morning and is continuing to drop lower as we speak. So 1.2606 is a pretty decent intermediate resistance for the pound, and the first resistance is this strong overlap here uh, at 1.2647. Okay, now what about this first support, right? Okay, naturally this first support identified on the daily time frame is way too far from where price is currently trading. Let's see if we can identify something a little bit more actionable and closer. Looking for strong overlaps. Right, probably yes. I think this level here is pretty decent, right? Because we can see price making significant swings back on 16th of May as well as 2nd of June, and then when price broke above it and went as high as 1.31 and now is pulling back, it did find support above this level last Friday as well. So this overlap support at 1.2539 does look like a pretty significant level, and of course it found support here on 9th of June as well. Right, okay, so first support is at 1.2539. What about second support? Okay, maybe I can use a Fibonacci retracement as well. From this swing low, 29th of June, going up to the swing high on, what is this, 14th of July. We're going to use the extension levels 127 and 161. See if we, oh, okay, they're simply too far. Once again, we're just looking for this moves resembles like a very strong Nike tick. And when you have price structure, price movement such as this, the 127 and 161 extension levels help us to identify potential support levels. But okay, simply these levels are just simply too far from where price is currently trading, so we're not going to use them, so we'll get rid of them. Let me just adjust this. So the Fibonacci retracement at 78 points. Okay, this is okay. No, this is no longer valid. We don't need that. Okay. Okay. We can use a Fibonacci retracement from this swing high here on 22nd of August, going down to the swing low last Friday. Let's see if any of the retracement levels line up with the overlaps that we have identified earlier. Right, so we can see 38.2% line up very well with the first resistance that was identified on the daily time frame. What about second resistance? Probably we do see a nice pullback here as well. Right, so we do see this level here that's close to where the 61.8% Fibonacci retracement level is. Probably we can use that as the second resistance because it's about is not that far in terms of absolute levels, but also in terms of uh, price structure. We see a very strong uh, bounce support level for the pound back in 4th of August, 8th of August, and then also as well here again on 18th of August as well. Right, so I think this level here can be identified as a pretty decent second resistance that also aligns with the 61.8% Fibonacci retracement level. Okay, so we're going to keep 38 and 61. I think I'll just keep the labeling in the middle alignment, so that's it's more clearer for everyone. Okay, not the best, but it's not that clear. But okay, you guys can see pretty much see exactly where uh the Fibonacci retracements level lie. Okay, so we have first resistance, second resistance identified or supported by the respective retracement levels as well as a strong overlap. We also see another intermediate resistance level at 1.2606. First support is fine at 1.2539. Okay, what about second support? How are we going to identify that? I do see a nice swing low here as well, a significant swing that occurred on 12th of June. This is probably a good level to identify as the second support. Anything else? Maybe I can use a Fibonacci projection. Let's see, starting with this swing high here. No, probably no, you can't use this. Oh, no. No, I don't think you can use the projection. Price structure is not that great to use the projection here. Right, okay. So for pound on the 4-hour time frame, we're just simply going to use this significant swing bounce here that took place on 12th of June as the second support, as to identify the second support, which is at 1.2487. First support is at 1.2539, which is also a strong overlap support here. Intermediate resistance is at 1.2606 and the respective overhead resistance or overlap resistances at 1.2647, 1.2692 are also supported by the Fibonacci retracement levels. Alright, what about dollar yen? Dollar yen has been strong as well since 13th of July. Right, so if you look on the daily time frame, there's also an Elliott wave analysis done. So we have wave 1 that started on 16th of Jan, ending on 7th of March. Wave 2 ending on 4th of March, with wave 3 ending on 3rd of March, and not 3rd of March, 4th of July, and wave 4 ending on 17th July, 14th, 17th July. Right, so after making a slight pullback here uh, on last Wednesday, price has bounced off to go higher. So dollar yen is looking very strong, and it's quite likely that price could continue to push higher towards where wave 5 is expected to end. And we also have a Fibonacci projection done. We have the 61.8% Fibonacci projection as well that's identified at where the wave 5 is expected to end. So that's how we've identified the first resistance on the daily time frame for dollar yen. Okay, and first support is this very nice overlap here. You can see a significant swing here that took place on 3rd of July. You can see another smaller swing that took place here on 23rd of August. Alright, okay. Let's zoom in onto the 4-hour time frame and try and identify more something more actionable in terms of resistance. Okay, we don't see any other overlaps here, but I think we can use a Fibonacci extension as well. So we'll do the retracement starting from this swing high on 21st of August, ending with a swing low on 23rd of August. We're going to use the extension levels once more, 127161. Right, okay. So in terms of levels that are a little bit more actionable for dollar yen on the 4-hour time frame, I would, okay, so I'm just going to keep this here, but change it to just a line. First resistance, I would set it at where the 127 percent Fibonacci extension is, and of course the second resistance level would be at where the 161% Fibonacci extension lies, because we don't see any other strong overlaps here. Okay, maybe we do see something here, perhaps. Let's see. Anything here? Okay, right, because okay, right. So if I go back here, this level we can see price making a bounce here on 1st of November 2022 and again on 2nd of November. So you can see pretty significant swings for dollar yen bouncing off this level. So I think this level also aligns pretty well with the Fibonacci extension level. So I'm going to use that as my first resistance, and then I can get rid of this as well. All right. So first resistance was that pullback level, which is at 147,044, which also aligns close to the 127% Fibonacci extension level. With regards to second resistance, it's just going to be at where this 161% Fibonacci extension level is pointing us to. Okay, in terms of support, there's no other major overlaps that we can identify. Or perhaps can we? Is there something here? Do see a significant swing here, roughly at about 145.81. Right, can we use this as some sort of support level? Let's see. Okay, we can see. Okay, back when did this occur? This occurred in November, right? I think yes, in October, November. So we do see dollar yen bounce off this level 3 times quite significantly back in October and early November. So this level, which is at 145.48, should offer some sort of support here should price retrace lower, right? So you can see price bouncing off this level as recently as 22nd August. But yeah, this level at 145.48 should offer some support to dollar yen should it pull back towards this intermediate support. But as you can see, dollar yen is pretty strong and is pushing up, is more likely to push up towards the first resistance. I think first support is fine. We're not going to change that. The first support on the daily time frame is very applicable for the 4-hour time frame as well, and we just get rid of second support here. And I don't think we need to identify the second support because we've got the combination of this intermediate support at 145.48 and the first support at 144.74. Okay, so this is dollar yen. All right, let's just go on to gold and oil. And yeah, if you have any requests for any currency pairs or commodities or even the indices, please do not hesitate to type in your request in the live chat box, and I'll be more than happy to go through the analysis with you. Right, so now let's just jump over to gold. So let's just start with the daily time frame. So if dollar index has been rising strongly over the last 6 weeks, naturally we're going to see gold prices being pressured as well, which is very obvious in this chart, right? From 19th July onwards all the way till 18th of August for 4 weeks, we see gold prices correcting very strongly, but it's found support about 2 weeks ago, or 10 days ago, and it's climbed a bit higher, but it still remains under pressure, right? Gold prices do remain under pressure, so let's try and find some more actionable levels for gold on the 4-hour time frame. Right, okay. So let's see. Okay, we have this is a Fibonacci retracement. So which one is this? This is okay. Let's see if you can use 23 and 38 to identify. Right, okay, 38 is there. Perfect. All right, so it's something that's a bit more actionable for gold prices. This level at 1,924 is a nice overlap level as well. We can see price bouncing off this level back in 4th of August, then running into resistance on 24th of August. And it also lines up pretty well with the 38.2% Fibonacci retracement. So I'm going to use that as my first resistance. So first resistance is at 1,924.78. Aligns exactly with the 38.2% Fibonacci retracement level. What about second support? Second resistance. Where are we going to identify that? Okay, I do see a nice overlap here at 1,943. Right, this is a pretty. We can see price making two significant swings here, bouncing off this level on 27th of July and then again on 1st of August. And after price broke through this level, it got rejected here on the 7th of August, right? So three times prices has reacted off 1,943 in a pretty meaningful way. So definitely we can use this as our second resistance as it is a very significant overlap level. Right, I think we can get rid of 50 as well. Let me see where the 61 lies. Okay, we get rid of 50, keep 61. Okay, this is a Fibonacci. What is this? This is a Fibonacci projection, I believe. Or is this a, yeah. So when did this projection? Okay, one, two, three. Ah, okay. So this Fibonacci projection, okay, just to clear up. Okay, so this Fibonacci projection was formed by starting from this swing low here on 29th of June, going up to the swing high on 20th of July, and ending with this swing low on 17th of August. I'm just going to delete it and run through it with you together. So Fibonacci extension, use the extension tool. Start with this swing low 29th of June, going up to the swing high 20th of July, and ending with the swing low on, which one is it? Which is the absolute swing low? Is it this? Yeah, it's this one here on 21st of August. Right, so we'll just pull up all the fibs. So we can see 61% projection is here, 78.6% is here, 100 is here. So we're just going to keep 61% because it lines up squarely with where the second resistance lies. So we've got uh, a confluence of Fibonacci levels. So what do we mean by confluence? That just means that when you have more than one Fibonacci level at a particular price point or a zone. So in this case, we have a retracement level at 61.8%, and we also have a projection level at 61.8%. So this is, I'll just highlight this as my resistance zone as well, which is above the second overlap resistance. Okay. We can also use the Fibonacci retracement tool, starting with the swing low here, going up to the swing high on 24th of August. Right, I think you can see price bouncing off the 38.2% Fibonacci retracement level. So I think we can use that as a guide. Yes, as we see here. Oh no, not there. Yeah, so we can see this level here, which is at 1,910. We can use that as a first support. You can see price bouncing off this level here on 23rd of June, then again on 3rd of July. The price did dip below this level and on 6th of July, but it's alright. I think we've got two significant swings here on 23rd of June and 3rd of July, and also this swing here on 25th of August that should give us some level of confidence that this is a pretty significant overlap support that aligns with the 38.2% Fibonacci retracement as well. Okay, what about second support? Where can we find something here? Okay, let's get rid of this zone as well. Second support, yeah, probably here. As you can see, another nice overlap level here as well. You can see price making a bounce of 1,960 on 30th of June. 6th of July, then again on 15 August, then running into resistance on 17 August and resistance again 22nd August before breaking higher. So you can see multiple instances where price has reacted off this level, and it also aligns pretty well with where the 61.8% Fibonacci retracement lies as well. Right. Okay, so second support is at 1960. All right, so we have the combination of the respective Fibonacci retracement levels and the overlaps to help us identify the first and second support levels. And for resistances, we have the first resistance identified by this overlap level at 1924.78, as well as the 38.2% Fibonacci retracement. And we have a confluence of Fibonacci levels to help us identify the second resistance zone, as well as the absolute level at 1943.88. All right, okay, we'll just touch on gold, touch on oil now. All right, guys, if you have any requests for any analysis, please drop them in the live chat box, right, so that we have enough time to go through it as well, right? Because yeah, if there's any requests, I can just pause any of the current analysis that I'm doing, and then we'll jump right into what you guys are looking for. Otherwise, I'll just continue with oil for now. Right, okay, so let's just start off with the daily time frame. So oil has had a strong bounce since 28th of June, so almost 8 weeks of relatively strong gains, right? But price has run into serious resistance back on 10th of August. If you zoom out a bit, we can see that this level here for WTI oil at $82.72 has acted as a major uh, significant overlap level, here acting as a support back on 18th of October last year. Then after that, once price got broken through, it's been acting as a major resistance since 5th of December 2022. So you can see multiple swings where price has reacted off this level, and more as recently as 10th of August as well. So you can see price bouncing off this level in a very meaningful way multiple times. So hence how this is how we've identified the first resistance. Right, okay. Let's get rid of all these annotations. Okay. So that's how we've identified the first resistance on the daily time frame. Intermediate support here at $77.29, which also aligns close to the 38.2% Fibonacci retracement level. All right, okay, so this is daily time frame. All right, hi, Zab Raja. Okay, your question is in terms of fundamentals, hawkish Fed statement on Friday. Continue if so. Yes, okay. So the uh the initial reaction to uh, Federal Reserve's Chairman Jerome Powell's speech at Jackson Hole was very bullish for the US dollar and hence the dollar index, and of course that's negative for gold. But after that, there was a lot of reversal in the price action, and as we see today for the dollar index as well, I'm on a daily time frame, it is actually pulling back. So I think this move could be overextended in the dollar index, so it's probably pulling back today and maybe even tomorrow. But given the outlook for the US in terms of the jobs data and the inflation data that's coming up towards the end of the week, it's quite likely we're going to see high volatility coming on Thursday. So it's quite likely on Wednesday, Thursday, we may see, should the data be positive of or should ADP data come in stronger than the forecast, which has been coming in, which has done so over the last 2 months. And if you have inflation data coming in higher, again, these two events are likely to drive the US dollar higher. But do take note, NFPs have been coming in weaker than expected over the last 2 months. So it's quite likely we could have another weaker reading on Friday. So we may see prices pull back. So I think looking at how the sequence of the data, fundamental data coming up this week, um, might see the dollar index pull back today as it currently is and tomorrow, but Wednesday, Thursday, should the data come in higher than the forecast, it's quite likely we can see dollar index push higher on Wednesday, Thursday, and then Friday we could potentially see another pullback in the dollar index. So of course, if Wednesday, Thursday dollar index is going higher, we can expect gold to fall, and then probably pick up on Friday as well. All right. Okay. Jamilu. Okay, we're going to cover dollar franc as well. Okay, so let's just quickly finish oil, and then we'll dive into dollar franc. Right. All right. Yeah. Okay. Welcome, Raja. Okay. Okay. This is daily time frame. Let's just zoom into 4-hour time frame. Right. Okay. So we've identified this intermediate support level, but I think for the 4-hour time frame, this intermediate support will act very well as a um, first support level for oil, and we also can see price breaking through this ascending trend line with a strong ascending trend line where price broke through and is continuing to make lower lows as we speak. Right, so I'm just going to get rid of this ascending trend line now, and I'm going to include a descending trend line starting with the swing high here. So we can see price has reacted off this level, or close to this descending trend line back on 21st of August, and last week on Friday as well. The initial move was to the downside, but then prices recovered, and then today we see WTI oil running into some resistance again. So it's pretty much respecting this descending trend line pretty well, and we can expect prices to drop towards the first support. Right. Okay. Right. Okay. So we also have this 38.2% Fibonacci retracement level that lines up pretty well, or not pretty well, is lines up just above the first overlap support. So we do have this support zone for WTI oil, which ranges from $77.10 up to $77.72. Right. This is a strong support zone for WTI oil. So if price continues to pull back from this descending trend line, it's going to at least come back towards 77.80 at the very least. All right, what about the second support? I think this level here at 73.30 can be used as a very decent second support. This second support here at $67 is identified for the daily time frame. That's simply too far for a 4-hour analysis time frame, so we'll get rid of that. Okay, let's see. We've also done, what is this? This is projection. Okay, right. So this is a Fibonacci projection. So this projection was okay. Wait, just let me tidy up the labeling. Maybe it's okay. So this projection level started from this swing high here on 14th of April, going down to this swing low here. Actually, why did it do that? This is not a very. Actually, I wouldn't do this because the swing low is actually here. Okay, so whoever's done this for the daily, okay, maybe it looks better on the daily time frame. Maybe that's why it was done. Perhaps. Okay, right. Okay. Okay, let's just keep it for now. Right, so this projection was done here. Swing high from 17th April down to swing lows 27 June, ending with a swing high on 10th August. So using the 61.8% Fibonacci projection level to help identify the second support. So that meaning is projecting price to drop from this 84.12 all the way down to 73.30. We also have the 61.8% Fibonacci retracement level. You can see this retracement was done from this swing low here, 27th of June up to 10th August. So we are using 38 and 61% Fibonacci retracement levels to help us add further justification to the first and second support levels. All right, okay, let's go into dollar franc. Right, so dollar franc's really interesting as well, because we zoom out a little bit and view the daily time frame, we can see that once you zoom out, we can see dollar franc is actually trading in a bearish channel. We can see price respecting the upper bound of this channel, right? It's making lower highs and lower lows, and it's running into serious resistance here. So this level here, which is at 88.50, we can see price bouncing off this level back in April, so acting as a significant support 3 times in April before going higher. So naturally now, once price breaks below this level, this support, what was previously a strong overlap support, is going to act as a strong overlap resistance, and price also aligns well with the upper bound of the bearish channel. So you can see this is a pretty significant resistance zone for dollar franc as well. Right, second resistance is identified at this pullback level at 89.20. You can see price finding support here, bouncing off this level a few times before finally breaking through. Okay. Right, now that we've seen how dollar franc is trading on a higher time frame, let's zoom in onto the 4-hour time frame and trying to identify more actionable levels. Okay, so I think with regards to first resistance, I think there's no issue. We'll keep the first resistance for the daily time frame uh, as the same for 4 hours. So that's at 88.50. Second resistance, I think, yeah, okay. If we look at this level here, which is at 88.80, you can see price making a relatively significant swing here back on 7th of July, and then coming close to here on 25th of August, running into resistance. So I think in terms of the first resistance, that's probably more applicable would be this level here. Right. Sorry, not first resistance, second resistance, right? So we're going to move this second resistance for the daily time frame down to 88.78, which is more applicable for the 4-hour time frame. Okay. Then what about support? We do see pretty strong, decent overlap. I would say here, decent overlap support here. Right. So if I look at this swing low that took place on 4th of May, this does look like a pretty strong overlap level as well. So I think we can use this as the first support for the 4-hour time frame. Right, just nice. So you can see this price has made a significant swing here on 3rd of May. And when price broke through it, it acted as resistance on 14th of August as well as 21st of August. And now it's acting as a support again. So that's how we've identified the first support by looking at this major overlap level. All right, what about second support? How are we going to identify that? Let's see. Okay, we can see price. We'll use the Fibonacci retracement tool starting from this swing low here on 24th of August, going up to the swing high here on, what is that, 25th August. Yeah, so we can see 38.2% lined up quite well with where the first support is. So we're going to keep that as a supporting factor to the first support. Second support, okay, there's not really any price structure for dollar franc is actually pretty messy. So it's quite difficult to get strong, or it's quite difficult to identify stronger overlaps. But if I were to use the 61.8% as a guide and I see price running into resistance here on 2nd of August as well as 14th of August, most likely I would probably choose, yes, it's not the best level. Yeah, it really is not the best level. But as a guide, yeah, probably something around. But actually, what is actually a very good support level is here, right? So I don't think, because you can see price making 3 significant swings on 17th of August, 22nd of August, and 24th of August, right? I don't think I'm going to force out any other level in between because its price structure isn't great. It's pretty messy, but we do see 3 significant swings or 3 significant bounces here at 87.69. So I think that's what we'll do for the second support. And for in terms of retracement levels, we'll just keep 38%. Okay, so this is dollar franc. So dollar franc is testing this first support. So if this first support does give way and break through, it's quite likely we can see this bearish trend continue, because as we can see, this is a strong resistance zone here. We have overlap resistance. We have the Fibonacci retracement as well, and we also have the upper channel of the bearish upper bound of the bearish channel. All right, okay. So this is dollar franc. So that means dollar index is pulling back. At least remember. So if this intermediate support for dollar index gives way, right, you're going to see a lot of strong moves for the euro, the pound, of course, the dollar franc as well. Okay, you can also see dollar yen starting to lose a bit of steam as well. and it's starting to pull back. But in terms of relative performance, the dollar is much stronger than the yen. That is why it's held up pretty well. But when you look at pound and euro, especially the euro, you can see the euro is relatively stronger than much more relatively stronger than the US dollar. All right, okay. So, right, okay, I've come towards the end of this session. All right, we do have time for one more request. So, if you have any other uh, currency pair or commodity or indices that you would like me to cover, this is the best time to drop your question or drop your request in the live chat box. Otherwise, yeah, do take note that this is for those who may have missed the pre-market analysis with Desmond earlier this morning. This is where you can catch it, and this covers the daily time frame in more detail. And also do take note of the economic events that are coming up this week, especially with regards to US related data. We have ADP data on Wednesday, along with GDP data as well. Then on Thursday, we have the PCI index together with unemployment claims potentially acting as bullish catalysts. Remember, Wednesday, Thursday, most likely these 3 or 4 economic news events are going to act as bullish catalysts for the US dollar. And then finally, we have the big one, non-farm payrolls coming up on Friday for September. And this is possibly because NFPs have come in lower over the last 2 weeks. So we could expect a slightly weaker number this for the latest reading as well, which would be for the month of August. All right, so do take note of this levels that are coming up, or the news events that are coming up. And before we end, we'll just go through the. Okay, for those who would just like to take a quick snapshot, you can take a quick snapshot of this slide. This basically summarizes the economic fundamental data that's coming up this week and how it could potentially impact and drive currency markets and gold prices. So do take a quick screenshot of this, and we'll just end off now by going through the ending disclaimer. All right, okay. So do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risks involved and seek independent advice if necessary. All right, thank you everyone. It's been a great session, and I'll catch you guys. And all do look out for any other webinars by IC Markets by my colleagues as well. All right, thanks everyone. Take care and have a great trading week.